This 4-step strategy consistently gives me profits like this, this, and this. And I'm going to show you exactly how. I've been trading for 8 years, and in that time, I've tested over 300 complicated trading strategies. And this is without doubt the greatest strategy that I've ever came across, which is why I named it the A+ strategy. In this video, you will learn the full strategy with 2 in-depth trade examples. You can see my results, but how can you do it too? I guarantee by the end of this video, you will learn how to make consistent profits with less than 30 minutes of work per day. We will do this in 4 simple steps. Step 1, identify directional bias. Step 2, session-based manipulation. Step 3, confirmation. And step 4, invalidations and targets. So with that being said, let's dive into this video. So it's very important to note that the A+ strategy that I'm about to share with you is fully mechanical, it's fully rules-based, and it takes all of the guesswork out of your trading. And this A+ strategy can be traded on all assets. So this is including Forex, futures, and even the crypto market. Okay, so step number 1 is identifying daily directional bias. And the problem is that so many traders are using subjective ways in order to identify their daily directional bias in the market. So for example, a lot of traders are using daily fair value gaps, daily order blocks, 4-hour fair value gaps. And a lot of these ways are very subjective, because like which fair value gap do you need to take? Which order block do you want to be trading from? And so as a result, at the end of this, a lot of traders become very confused. And so my way of doing things is super simple, super mechanical, and really straightforward. But this is where you're going to have to hear me out. So as you can see, we've applied the exponential moving averages on our chart right here. And this is what we're going to use in order to identify our bias in a very mechanical, systematic way. So for example, when the 50 exponential moving average is less than the 100, which is less than the 200, this indicates to us as a trader that we have a sell bias market. And so we would only be looking for shorting opportunities. So if we zoom out right here, this is basically telling you that momentum is to the downside. And because we're trading trending assets like US 500 and gold, etc., these assets tend to trend very heavily. And so as you can see, price is moving from top left to bottom right. So just in terms of a general macro bias, we know that we're going to be sell bias on this market. And we know that this market is way more likely to continue trending to the downside. It's very important to note that this is a 1 time frame strategy, which means that all of the analysis, the execution, everything will be on the 15-minute time frame. Okay, so this is an example of a sell bias market. Let's take a look at a long bias market, right? So we're still looking at the 15-minute time frame. However, in this scenario, you can see that the 50 EMA is greater than the 100, which is greater than the 200. So this would indicate to you as a trader that we have a long daily directional bias. We have a long bias on this market. And as you can see, right, any sort of pullback in price was an opportunity to get long in this market. And because we trade trending assets, it's more likely that this market is going to continue to the upside. And an example where we would have no bias in the market would be right here. You can see in this example, the 100 EMAs on the bottom, the 50 EMAs in the middle, and the 200 EMA is on the top. And so we would not have a clear bias in this market, and so we would be sitting on our hands. Okay, so in order to add the EMAs to your chart, head over to the indicators tab at the top of your screen. And then I want you to type in EMA 20, 50, 100, and 200. It's this one by Dr. Sweets. You can add it to your favorite, add it to your charts. And then I want you to open up the indicator, double click the indicator, and you can uncheck the 20. So this is the 20 EMA right here. Uncheck this box. And then you're left with the 50, 100, and 200 EMA. And then you can click OK, confirm this, and you can now identify your bias in the markets. Okay, so step number 1 was incredible, but step number 2 is the most important, yet it is often the most overlooked. And step number 2 is a session-based manipulation. So what I want you to do is add a session indicator to your screen. You can use any session indicator, but the one that I personally use is this one right here, and it's called Trading Sessions-Sonar Lab. And this is by View Trading. Again, add this to your chart, add this to your favorites. And so what we're going to be looking for, let's say that we're sell bias in this market, right? And let's say this is the Asia high right here, or this could even be like the London high. Then what we're going to be looking for is during a kill zone, or maybe even slightly before a kill zone, We're going to be looking for price to come above, manipulate above a previous session's high. Then we're going to be looking at a potential shorting opportunity to go to the downside. And so let's say that we're trading a New York session, right? This is between 8 a.m. and 10:30 a.m. Eastern. And what this is going to do is it's going to do two things. Number one, this is going to trap traders long into this market, thinking that this is a breakout to the upside. And this is also going to stop out any early sellers, right? Because if you're short in, let's say, like the Asia session, well, you're going to have a stop loss resting above the Asia high or above the London high. And so what this will do is it's going to stop them out. And this is what provides the liquidity and fuel for the bigger players to actually move the market in the intended direction. And so this is really what a session-based manipulation is in a nutshell. But now let's translate this over to a real trade example. Okay, so in order to identify our session-based manipulation, we need to identify our sessions on the chart, right? And we have the Asia session. This is from 6 p.m. until 11 p.m. Eastern. We have the London session from 3 a.m. until 5 a.m. Eastern. And finally, we have the New York session. This is from 8 a.m. until 10:30 a.m. Eastern. Okay, so because we're sell biased in this market, what we're going to be looking for is price to come above a previous session high. So we have the London high right here, and we also have the Asia high right here. Once we've seen a form of session-based manipulation, this is going to trap a lot of traders long into this market. This is going to stop out any early sellers, and then we can start to think about getting short in this market. So what we're doing now is we're waiting very, very patiently. We're waiting for price to manipulate above a previous session's high. And this is exactly what we've got right here. So a lot of uninformed traders, a lot of traders that are not aware of the context, right? They don't understand the directional bias. They're going to see this as a breakout to the upside. They're going to get long thinking that, the market's going to go higher. Or if they were already positioned short, let's say from like the London session, well, they're going to have a stop loss above the London high, above the Asia high. Well, they've just been stopped out. And so what this does is it provides the liquidity and fuel for the bigger players to actually move the market in the intended direction, which, as we know, the intended direction is sell bias on this market, right? Because what we have now in this market at this current stage is we have a lot of buyers interested in this market. We have a lot of traders that are being induced long into this market. And so this is step number 2. And step number 3 is really, really simple. All that we're waiting for is a 15-minute bearish confirmation. And this has to occur during a New York kill zone. So this right here is your 15-minute bearish confirmation. And this closed at 9 a.m. Eastern. But we don't just enter on the closure of this candle, on the closure of this bearish candle. So what I mean by that is we're waiting for price to come down and break the low of this confirmation. We're going to enter short either via a sell stop in the market or via a market execution. We're going to be tagged short, and then we're going to be looking at taking this trade lower. Right, because this confirmation is showing you that momentum is actually stepping into this market. This is showing you that sellers are starting to take control of this market. But also notice that we close back inside the range. So this is why this is an A+ trade, because we see a manipulation, but notice as well how clean this price action is. We've got very, very clear manipulation. We have clear intention from sellers stepping into this market, and we're also closing back inside of the Asia range. So what we can classify this is your manipulation. And when we close back inside the range, this is the reclaim of this level. And that is why this is an A+ setup. So my entry was on the break of this candle low right here. And this leads me on to step number 4, which is invalidations and targets. So our stop loss always goes above the manipulation high, and it's really important to account for spread in the market. So if you look very, very closely here, right, you can see the stop is 3.2 points. So what I'm going to do is I'm going to account for spread, and I'm going to make this 3.7 points. Then I'm going to be looking at targeting a mechanical 1 to 2 risk to reward. So it's very important that every single trade you target a repeatable risk to reward. This is to ensure that your backtesting data is very reliable. Okay, so I was tagged short in this trade right here, and I actually took this on a live stream with all of my students. And I also sent a notification to all of our members to let them know that we need to start paying attention to US 500 on ES, because we may have a potential shorting opportunity. And then it's just a case of setting and forgetting this trade. Once you're tagged short, there's no micromanaging, there's no interfering, just allow the trade to play out. And as you can see, in around 45 minutes, this trade did hit take profit for a 1 to 2 risk to reward. And it's very important to note, you will never micromanage any trades with this strategy. Always just need to allow the trades to play out, because what often happens is traders get emotional, they close trades early, they micromanage, and then they look back at the end of the day and they're like, if only I held that trade. And so this right here was a valid A+ trade, and I would take the trade every single day if it did present itself in the markets. Okay, so let's recap it, right? Number one, directional buyers. What did we have? 50, 100, 200 EMA. Number two, we had a session-based manipulation, taking out the liquidity above a previous session's high. Number three, we had our valid A+ confirmation. We entered on the break of this low via either a sell stop in the market or via a market execution. And then step four was our invalidations above the manipulation high and target a repeatable mechanical 1 to 2 risk to reward, and then set and forget this trade. So now let's have a look at another trade example of literally a trade that I just took this morning. So we're looking Friday, 7th of November, 2025. Let's break it all down. This strategy has around a 50% win rate with a 1 to 2 risk to reward, meaning that you will lose trades. You will have losing streaks. And so what that means is you can expect to lose 1 in 2 trades. So I want to make it very clear, like, this is not the holy grail system. You're going to have losing trades. You're going to have winning streaks. You're going to have losing streaks. And so anything more than a 33% win rate, you make money long term. So now let's break this trade down, the second trade case study. Step number one is, what is our bias, right? Well, again, we have the 50, 100, and 200 exponential moving average. So this indicates to us that we have a sell bias market. Step number two is we need to identify a session-based manipulation. So what you're going to go ahead and do is you're going to mark on the previous session's high. So in this example, the previous session is the Asia session. And so what we're looking for is price to manipulate above this Asia session high. What this is going to be doing is trapping a lot of traders long into this market. This is also going to be stopping out any early sellers from the Asia session. And this is ultimately what provides the liquidity and fuel for the bigger players to actually move the market in the intended direction. And so we're waiting patiently for the session to open. And as you can see, we get the London open right here. And we've started to manipulate above the Asia session high. So now that we've seen a session-based manipulation, a lot of traders are going to be on the wrong side of the market. This 15-minute bearish confirm needs to occur during the London kill zone, so which will be between 3:15 and 5 a.m. Eastern. And so this candle closed at 3:30 a.m. Eastern. We're inside the kill zone. And so this is step number 3, right? We've seen the confirmation. That doesn't mean that we're just going to blindly enter on the closure of this candle, right? We're going to enter on the break of this low right here. So this is either going to be via a sell stop in the market, or this is going to be via a market execution. As you watch price visually break this low, you're going to then look at getting involved as we do that. So my entry this morning was literally on the break of this low. And so this leads us on to step number 4, which is invalidations and targets. Invalidation above the manipulation, make sure to account for some spread in the market. And we're looking at targeting a mechanical, repeatable 1 to 2 risk to reward, which in this example sort of lines up with this Asia session low right here. We know that there's going to be a lot of liquidity resting below this low right here. So why is this a valid A+ trade? Number one is because we've seen very clean price action after the manipulation, right? So we're not really too bothered about the price action before the manipulation. It's more important what happens after the manipulation. Also, once we have seen the manipulation, what we get is price closing back inside the range, right? So we have the Asia high right here. Price goes ahead, manipulates above, and then closes back inside, right? This is the range high right here. So that is why this is a valid A+ trade. And so I was tagged short in this trade right here. And then it was just a case of setting and forgetting. As you can see right here, we got around a 50% drawdown towards our stop loss. You know, this is where a lot of traders may have went wrong. They may have entered short here. They may have got emotional. They may have closed this out. They may have micromanaged this position. But as we know, we need to be patient. We need to be disciplined, and we need to allow the trade to play out. And so we started pushing into profit right here. And as you can see, take profit was hit for a 1 to 2 risk to reward. So this is a valid A+ trade. I would take the trade every single day if it did present itself. And as you can see, we got a pretty aggressive sell off in this market. And this trade took around 2.5 hours to hit a full take profit.
Free audio post-production by alphonic.com.